Good afternoon. My name is Spencer Levy. I'm America's Head of Research, and I'm delighted to be here in beautiful but hot Dallas, Texas today with our colleague and friend Jack Gosnell, Executive Vice President of America's Retail Services, recently joined us with the merger with UCR. Jack is a 40-plus year industry veteran, one of the deans of the retail practice, not just here in Dallas, but nationally, former member of the Armed Services, and a real pleasure to have you here today, Jack.
Thanks very much, Spencer.
So thanks for joining us. So we're going to talk a little bit about what's going on in the retail markets in the second quarter of 2015.
Great.
Let's start big picture. While the economy is improving overall, and retail is improving overall, I would suggest to you that in open air retail, the recovery's been a little bit slower, certainly for inline space than most people were anticipating. The consumer hasn't spent as much money, and there are certain segments doing well. Luxury seems to be doing quite well, and the lower end seems to be doing quite well, but it's that middle that's a little bit softer. Is that your point of view, Jack, and how do you make of that?
Really not down here. Open air has taken off like a rocket ship down here, and it was because nothing was built between 2009 and 2012. So all of a sudden, new products coming online, and it's being jumped on quickly. We're at 110% market. But I think there are areas of the country where malls have been more prolific and more powerful, and they've held on to that market. They've had it for a decade or two.
And if you take a look at some of our statistics in some of these markets outside of Dallas, you're correct. Dallas has performed very well. Houston is actually the second or third best performing retail market in the country. But markets in some of the Midwestern cities have actually continued to see rent declines. And even in some of the major metros, rent increases in the open air segment have been much slower, certainly than in the urban cores. But speaking of the urban cores, one of the really strong performing urban cores is right here in Dallas. And that's a trend that we're seeing across the country. What do you make about this trend of retail being much stronger in the urban cores? In fact, many of the retailers moving to the urban cores.
Sure. Well, it's a demographic switch. After the World War II, most young people entering the workforce aspired to live in suburbia. And now the millennials are tending to want to get within a mile, up to 90% wanting to get to a mile of a central business district, an arts district, exciting club and restaurant area. So it's a lot more dynamic market, and I think that's been a big responsibility for the shift. I think economics are forcing kids back in. I think it's cheaper rent, they can live closer together, have much more sense of community with a lot less travel. And it's the convergence of all of our mass transit. So I think that's pulling people in.